Hi there, a very warm welcome to the weekend edition of Buy Now, Sell Now. I'm Kamya Verma.
Hi everyone, I'm Avinash and we've got lots lined up today on the show. We'll be discussing some stock queries first up and the aviation space. So Spicejet and Jet Airways up for discussion.
Well, not just that, on our Portfolio Advisor segment, we'll be discussing Shiv Sharan Agarwal's portfolio up ahead.
Okay, let's introduce then our guests and they'll be helping us over the next 30 minutes. Aiding us on the fundamentals, we have Avinash Gorakshakar, and here to talk about the technicals, Gaurav, Bissa, derivatives analyst at LKP Securities. Welcome to the show, gentlemen. Well, let's kickstart the show with our first query. This has been sent in from Vireshwar Dahiya from Haryana. He's got his first question up on Spicejet. Let's hear him out.
Good day. This is Vireshwar here, and I'm from Sonipat, Haryana. I'm into investing stock for last 2 years. I've got few queries regarding the stock I hold. The first one is Spicejet. I hold 42,000 shares, which I bought at the average price of 25. I want to know the long-term and short-term view.
Okay, so he's seeking advice from a short as well as a long-term perspective. Quite a hefty quantity there, but making good money given that Spicejet is currently quoting at around 73 to 75 rupees. Recently, we had an exclusive piece of information. Sources indicated that the Aviation Ministry had written to the Oil Ministry on the high ATF or aviation turbine fuel prices, and they're seeking passing on the benefit of the low crude oil prices for some of the airlines as well, questioning really the rationale of the kind of frequent hikes that we've seen in the ATF prices of late. So that would indeed come as quite a bit of a positive for some of the aviation companies which have been battling with high ATF woes. In fact, carriers have been constantly blaming the oil companies for not really passing on the benefit of low crude oil prices. Remember, we had a hike in the prices of just 1.5% very recently, and prices of ATF have been hiked 5 times in the last 1 year. But no worries for our investor here because he's making good money on Spicejet. So let's get in the views then on the fundamental side at least going. And Avinash, walk us through what exactly you think he should do. Should he book some of his profits? Should he stay invested? How does Spicejet look?
No, I think Avan, he's got a good price at which he's invested in Spicejet, and the quantity is pretty large. So I would presume that despite the fact that there have been some 4 to 5 ATF price increases, I think the base crude price still continues to be pretty comfortable. Air traffic has been growing quite remarkably well, and my sense is FY17 would be another good year for Spicejet. So clearly, not only from the earnings perspective at the net level, but even at the operating EBITDA level, my guess is I think still current crude prices are manageable, and probably the company should record a strong hefty bottom line in even FY17. So my suggestion is hold on for the next 6 to 12 months. He could get a price of around 90 to 95.
Okay, what a spectacular turnaround story has it been for Spicejet from the levels like our guest just pointed out. It can really reach up to about 90. The viewer has in fact bought the stock at about 25 rupees and the stock currently quoting at about 75 rupees. We'd also like to get in a view then from our other guest, and on the technicals, how are you viewing the stock at this point of time? Gaurav?
Well, for the short term, I would say there are some headwinds you can talk about. The levels of 75-80 are proving to be a strong resistance zone, supply zone. We have seen some amount of profit booking coming in from these levels. So if the gentleman wants to know what the view is for the short term, I would say there will still be more consolidation. Expect consolidation for another a few weeks at least, if not months. And once it crosses 80, then I would have a similar view that it may have a retesting levels of 90-95, and it can even cross those levels, because the kind of breakout of the long consolidation generally leads to a significant upside. We have seen the stock showing similar kind of pattern when it came out of consolidation from 20-30 zone to around about 45-50, and then there was another breakout from 50 zone. Similar can be expected for the short term. I think since the quantity is quite large, if he's comfortable, he can book some amount of profits, and once 80 is crossed, I think he can have a stop loss. He can revise the stop loss to 66 to 68 and play for targets of 95 to 100 in coming months.
Okay, that's the view coming in on the fundamentals as well as the technicals on Spicejet. Above 80, the stock has the potential and the legs to move up to even 95 to a triple-digit 100 rupees stock. That's the view coming in on the technicals. And even Avinash reckons that it's a good stock to keep in your portfolio. So hold on for levels of 90. Now, next up, he's got another aviation stock. Clearly seems to have a fancy for flying high. So let's hear out his query on Jet Airways.
I have 755 shares of Jet Airways with the average price of 252. Again, short-term and long-term view.
Okay, again, Vireshwar has got a good buying price for Jet Airways, given the stock is currently trading around 626 levels. In fact, this week also the stock has seen a very good run-up. Gaurav, would like to get in your thoughts on the charts of Jet Airways. How do you think this one stacks up against the other aviation stocks?
The stock has been again seeing good amount of consolidation, but it's been forming base. It started seeing good amount of base from 520, 530 levels. Then it came out the consolidation phase and went directly towards 575, 580. It consolidated a little bit over there, and then it's now at 625, 630 and seeing consolidation. So it's a very beautiful pattern that it's seeing consolidation, and just the base is being shifted to the higher levels, and that's a very positive sign for the stock. So in the near term, the stock might test levels of 675, 680. I'm just talking of next few weeks or next few days. Over a slightly longer term, I think the stock has potential to touch levels of around about 750, 800. 665, 670 is the immediate resistance, I would say, and that's a very strong resistance. If that is taken out, then we can have a smooth ride till 750, 800. So for somebody who has been holding on to the stock from much lower levels, I think the trailing stop losses are important, because the market conditions are such that you may see some amount of profit booking coming in. It's not that difficult. One can have a trailing stop loss at 545 to 550, because that is the level from where the breakout started in the stock, and one can play for targets of 750 to 800. That would be the immediate targets that in a couple of months, and going ahead probably a year or so, we can see much more returns coming in from 800 levels.
Okay, so far so good, no turbulence for Jet Airways, but I think Gaurav stressed on the point that keeping trailing stop losses around those 525 to 550 levels, that's important to monitor on a Jet Airways. Let's get in a view then, Avinash, on the fundamental side. Our investor here is making good money right now, but do you think that this is one of the more quality plays within the aviation space, that with the entrance of Interglobe Aviation on the buses, things are likely to be shaken up a lot more? The competition is likely to only intensify within the space. Do you view that as a positive or a negative, and what would be your call here?
No, I think Avan, again, he's got a very great deal of margin of safety since his buying price is considerably low. But looking at Jet's business model and the kind of geographical reach they have, my sense is, despite Interglobe coming in, and which was already there, now it's a listed company. My sense is, I think you will probably see air traffic growth as long as it continues at a healthy pace. I think the kind of support Etihad has given to Jet in terms of liquidity, in terms of working capital, I think that is going to play a very important role for Jet going forward. And as far as the domestic demand outlook is concerned, I think it still continues to be buoyant. I think they'll still manage their crude and their operating costs pretty well, and operating leverage is still pretty high. So I would not be surprised that even if he holds on for the next 12 months, probably a target price of 750 looks possible. I think very clearly, I think possibly the stock has consolidated for a long time, and I think next 12 months FY17 earnings should be pretty good.
Okay, so there you have it, Vireshwar. Consensus whole call coming in from both our guests. In fact, Avinash is vouching for a 750 kind of a target price for Jet Airways over the next 6 to 12 months. Let's slip into a short break at this point of time, but on the other side, we'll be discussing Shiv Sharan's portfolio. Stay tuned for that. Great to have you back with us on Buy Now, Sell Now's Weekend Edition.
Okay, let's focus in on our Portfolio Advisor segment. Well, today we will be discussing Shiv Sharan Agarwal's portfolio. Let's just walk you through his profile. He's 32 years old. He's a businessman from Kanpur, and he's got a time horizon of the next 1 to 5 years, really, with 9 stocks in his portfolio. So let's walk you through his investments so far. Alembic, he's got 500 shares picked up at 37 rupees. Chambal Fert, so 60 rupees is where he's picked up close to 500 odd shares. Crompton Greaves features on the list, 200 odd shares at 180 rupees. Moving on then, MMTC, 109 shares is what he's bought at levels of 45. Escorts features on the list, 150 rupees is his purchase price, total of 100 odd shares. There's First Source Solutions from Midcap IT, close to 309 shares at 36 rupees. Moving on then, Sonata Software, 100 shares at 148 rupees. There's 500 shares of Federal Bank bought at 50, and Gale India as well, 368 is the buy price, and it's close to 150 shares. Avinash, clearly a portfolio that's concentrated purely on mid-cap stocks. What do you make of the diversification and the kind of stocks that he's got? Let's start, in fact, with the first three names. Alembic, he holds that at 37, Chambal Fertilizers and Crompton Greaves, in which he's losing out pretty heftily.
No, I think as far as Alembic is concerned, it's basically a real estate company and has a decent, exposure and shareholding in Alembic Pharma. The results this year have not been quite encouraging, but if you see the real estate kind of upside value in terms of monetization expected over the next 12 to 18 months, I would suggest that he should hold on for the next 12 to 15 months. He could get a target of around 55. Chambal Fertilizers is clearly a play on the monsoons, and my guess is if the monsoons are pretty good compared to the previous 2 years, we could see a bump up and possibly a price of 75 in the next 6 to 12 months. And finally, Crompton Greaves, I presume he has bought the old Crompton Greaves, which was inclusive of the consumer electronic business. I would suggest that, looking at the current scenario, I think Crompton Greaves share depicts the power business and the industrial business, where possibly for a couple of quarters the stock could underperform. So here he could exit and probably look at a stock like Equitas Holding, which is a very recently listed company in the microfinance space. I think clearly going within the industry, I think Equitas is a very dominant player with a very strong business model in housing finance. Here he could expect a target price of around 190 over the next 12 months. So he should better switch here.
Okay, so that's the call coming in on the first three stocks. Hold on to Alembic and watch out for a target price of about 55. Chambal Fertilizers, good monsoons expected, and on the back of that, expect a good run up for the stock as well. 75 is the target price that Avinash is looking out for. And instead of a Crompton Greaves, you should look at investing in Equitas, a recently listed company, and watch out for a target price of 190. Avinash, let's discuss the next three ideas that he has in his portfolio. MMTC, which he bought at a price of about 45. He's clearly losing on that one. Escorts is the other one, which he bought at a price of 150, gaining quite a bit on this one. And what's your call on First Source Solutions?
I think as far as MMTC is concerned, Kamya, my guess is, this is a PSU stock where there's hardly any public holding, just about 10 odd percent, 90% held by the government. And operationally, numbers have been pretty weak. In fact, for the last 2 years, the company has actually made a EBITDA loss, and the profitability at the net level has also not been great. So I would suggest that he exits the stock even if he's incurring some losses, and probably look at a stock like Dish TV at the current level of 89.90. My sense is, I think over the next 12 months, he could get a good return around 125, 130 levels. As far as the other two stocks are concerned, that is Escorts, I think tractor sales have started picking up quite positively for the last 2 months, and my guess is Escorts is a dominant player here, so probably just hold on for the next 12 months. Hopefully the monsoon is good. You could look at a target price of around 190.
Okay, that's the view coming in. A switch from MMTC to Dish TV instead, where you can put your money. Stay put then with the rest of the investments on Escorts and First Source. Moving on then, what's the advice on Sonata Software? Fundamentally, how does this one stack up vis-a-vis some of the other players? Federal Bank at 50 bucks and Gale India, what would you tell him to do?
No, I think Sonata Software, again, within the mid-cap IT space, we believe that over the next 12 months, business prospects could improve significantly. In fact, the management commentary was very positive, and my guess is over the next 12 months, one could look at a target price of around roughly 180. As far as Gale is concerned, again, it has been underperforming in the short term, but looking at the kind of business potential for the piped gas business, my sense is if he can hold on for the next 12 to 15 months, he could get a target price of around 390.
Okay, and what about Federal Bank, Avinash?
Federal Bank again, Kamya, the stock actually has underperformed recently because Q4 was extremely negative. In fact, the bank provided a NPA of almost 300 odd crores, but post the management commentary, I think one gets a sense of relief that these kind of provisions may not incur again in the coming year. So probably one can take a long term view, say about 12 to 15 months, and expect a target price of around 62.
There you have it. That's the view coming in on the entire portfolio. Stay put. Good calls on Sonata Software, Federal Bank and Gale. Quick break, but before we do that, let's remind our viewers that this is only a model portfolio that has been recommended. You must consult your individual investment advisor before taking any investment decisions. Come right back because our guests will be spelling out all of their top stock ideas.
Welcome back. You're watching the weekend edition of Buy Now, Sell Now, where we are in conversation with our guest Avinash as well as Gaurav. Well, for the week, we saw the Nifty losing about 1.5%. But getting a check then from Gaurav and find out what is the kind of momentum that he would expect in the coming week. Gaurav, first up, your thoughts. We did slip below the 7,700 mark as well, but did manage to inch up above that mark. What's the new low or high that you would expect in the coming week for Nifty?
Well, Nifty has closed near a very crucial level, 7,700 if breached, and if it trades below 7,700, then we can see 150-200 points fall coming in. That would be around 7550, 7500, and that would be led predominantly by banking space, because as long as Bank Nifty trades below 6,500, it will keep on giving pressure to the Nifty index as well. On the other hand, for now, I think Nifty seems to be stuck in the range. 77 should be acting as a support, immediate support. We are just about there, and the immediate resistances are seen at 7,800, 7,850. The upsides of 8,300, 8,400 would be seen only if Nifty trades above 7950, 8,000 levels. Until and unless that sort doesn't happen, the Nifty will continue to trade in the range.
Okay, that's the cue coming in on the frontline index. Walk us through your views then on the Bank Nifty futures, because that too has been fairly lackluster, although some of the banking stocks did manage to do well in Friday's session. What's the view on the Bank Nifty given that it underperformed severely, down 3% for the week gone by?
Bank Nifty has seen good amount of jump. It saw about 3,000 points jump, and now if there's some amount of pressure, some amount of profit booking, then I think that's a healthy thing. But if you talk of very short-term technical part, then I would say 16,500 becomes a very pivotal level. As long as it trades below 16,500, there is a possibility it may try to retest levels of 15,500 to 15,700. And if you look at the individual names, whether it's something like Yes Bank or Axis Bank or ICICI Bank for that matter, they have been trading under pressure, and some of these banks have given a decent breakdown. And if there is no recovery that is seen in next few trading sessions, then the possibility that these names will drag on to Bank Nifty to lower levels. If you look at PSU banking names, after giving a strong breakout, they did not manage to hold on to those breakout levels, and now we are seeing the PSU banks under pressure as well. So for the time being, the outlook remains cautious, mildly bearish. As long as it trades below 6,500, I would not be going long. Rather, I would recommend going long on out of the money put options.
Okay, that's the call coming in. Let's nail it down to individual stock recommendations then. And Avinash would like to know on the fundamental side, for somebody who's looking to invest in the long term, what is it that you would like to suggest?
I think the first stock which we have been recommending to our clients is a small capital goods company called Elecon Engineering. In fact, Elecon Engineering has been a very old company, more than 65 years in the business, and controls a very large market share in the gears and material handling equipment. What is noteworthy about this company is that Q4 has been very strong. On a 26% growth in top line, we saw a 300% growth in profit. And annual results for FY16 were also quite good. In fact, the bottom line, shot up by more than 100% to 38 crores, and the management commentary post the results was extremely positive. Some more good news for the shareholders of Elecon has come in the form of a merger of an unlisted company called Elecon EPC, which actually has a net worth of 200 crores and actually has been merged at a valuation of just 20 crores. So obviously, merger benefits and synergy benefits would also come in. What is interesting is that we have seen a lot of green shoots in sectors like cement, power, coal handling, typically sugar sectors as well as the defense sector, and this is where Elecon operates. So our sense is that the coming year, that is FY17, would be a good consolidation year, and hopefully if the order traction and the merger benefits trickle in, I would not be surprised that we could see a stronger earnings growth for FY17. In fact, for FY16 earnings grew by more than 100%, and the company came back on the dividend list. From a valuation perspective also, the stock trades at a market cap of just 650 crores against a top line of 1000 crores. So there's good amount of risk reward available. Our sense is over the next 12 months you could get a target price of around 82. The second stock is from urban lifestyle space, Somani Ceramics. Again, a very strong player in the tile segment, and our sense is, the outsourcing model has worked remarkably well for them. Their margins, their ROE, return on capital employed, have remarkably improved over the last 2-3 years. Here also, I think taking a 1-year call, I think earnings growth plus the kind of volume expansion, from projects like smart cities, Clean India, plus the overall real estate market, we expect a target price of 470 over the next 12 months.
Okay, those are some long-term wealth creation ideas on the fundamental side. And what about you, Gaurav? What looks attractive on the charts?
My first recommendation would be a buy on petrol and LNG. We are seeing good amount of long positions coming in on a consistent basis. It's given a good breakout as well. Swing high has been made. Volumes participation has been extremely well. It's a matter of time before it touches levels of 295, 300. One can have a stop loss of 270 and go long into the stock. Second recommendation would be a long call on Tata Power. It's been consolidating for past few months between 58 to 68 levels. It's coming out of that consolidation. The volume participation is quite strong. A good amount of long positions seen getting built. Options are quite active, and there's a possibility that the kind of momentum that the stock has built up, it may test levels of 80 in the current month. But thus, based on this premise, I would recommend going long in the stock. One can have a stop loss of 69 and play for targets of 78 to 80.
Okay. Those are some recommendations coming in from Gaurav. With that, we'd like to thank Gaurav as well as Avinash for taking the time out and sharing your perspective with us on Buy Now, Sell Now weekend. Completely out of time on this edition then. Thanks for watching. We'll see you in the coming week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.